Hello everybody, welcome back. Let's get stuck into some Bitcoin as we seem to be pumping up now from a Golden Cross retest. It's a 200 exponential moving average on the 4 hourly, which normally has a V-shaped recovery effect. We've already rebounded from there quite dramatically. If you think about that, that's a perfect kiss on the cheek there, right all the way up to the 50 exponential, which is fine. It's a 3.5% move, give or take. And I reckon it's going to continue on. So this isn't any different to what we've been expecting generally anyway, which is, nothing more than a retest of these sort of lower zones. We had the 20 moving average being the daily Bollinger Band at 68,000. Then we had the 21 down at 68,250. And then from there, I suppose on the daily, there was just a nice big drop all the way down to 65,800. But actually, the 4 hourly is where it got saved. Normally in an aggressive, volatile, trending move, I suppose a 4 hourly is more appropriate than anything. If it were to come back down again, between here and 66,246, so many digits. So, right, that's what we're looking at. We're looking at a rebound now, and a rebound which should take you beyond the previous local high into a new all-time high. Surprisingly, I know that's what it sounds kind of shocking. It's probably counter to what everybody else is saying. I don't listen to anybody else. I've got to just do my own thing. If you let other people's analysis cloud your own judgment, and you really have to just blame yourself for any mistake. Take on board advice, but don't copy, right? Don't copy. If you believe what I'm saying, it must be because you've seen it yourself. Right, let's have a look at momentum. Momentum's fine. There was never any bearish divergence on this move up on the RSI. A little bit on the money flow index, to be fair, but not on the RSI. So momentum's good, although volume is subsiding a little bit. But we've still got the trend signal. That's still playing out. And in fact, it's just getting stronger. We've got the conversion baseline on the Ichimoku cloud. This blue and this red are diverging. Chiku span is far above price action. For us to get cancelled out today, it'd have to close below 62,500. Which, obviously, anything's possible. I don't really see that, not based on the technicals. We don't see any reason for that. Obviously, the elephant in the room is the elections that are going to take place over the next 24 hours. That is a big elephant, so we have to reserve an element of confidence and put that to the side and recognise that there are obviously some forces which are bigger than technicals. And I'm not suggesting we should, put all our eggs in one basket thinking that so-and-so is going to win, which means this is going to do that. I alluded to that yesterday on yesterday's video. Yeah, if you want to sit on the sidelines and wait, because at that point then an environment will become a little clearer for who and where and what it is that you're going to invest in, that's different. But to try to assume that somebody is going to come in which would have a positive effect on whichever market is a gamble. So you might as well go and gamble on it, really. You might as well go place a bet, because effectively that's what you'd be doing if you're trying to trade through that sort of... So I wouldn't go about doing that. But I personally feel like looking at the charts suggests one thing and one thing only, which is a trend, a breakout of a long-term consolidation, which was neat and tidy. And then when you look at it on the weekly, you take away a lot of that volatility, really. We look at the candle bodies. We closed here a couple of weeks back. We opened there a couple of weeks back, closed above there a couple of weeks back, closed there a couple of weeks back, retested it on a wick basis last week. This week we've already come down to retest it, and so far we're trying to make our way back up. So from a technical perspective, the trend is in play, the breakout is in play, and we should expect new all-time highs to be in play. So that's good. I like that. Now, when we're talking about altcoins, it's a slightly different story, obviously. The confidence hasn't really affected this in any positive way. In fact, it's not positive at all. We did have a trend signal on this one, although we did say it was relatively weak. That's been cancelled out yesterday, so that's done. There is no trend signal on the total 2 anymore. You can blame Ethereum for that. Some altcoins still look relatively good. Now, in its defense, yeah, it was a death cross retest and another death cross retest. We still technically have a higher low when it comes to the overall format of the trend. We've got hidden bullish divergence on the RSI, which I suppose is better than no bullish divergence of any form. So it's not that bad. Momentum still creeping to the up. We had the hidden bullish divergence on the weekly, which marks the candle body all-time low over here. So this could still be a trend waiting to form and break out. Because it's a descending triangle, it's easy enough to consider this a breakout once you've got a breakout and a close, maybe even a retest and above. Sometimes you get fake outs, so you might see the first big move take us up to this candle body high over here, about $1.8 trillion market cap on the total too. That could be the first destination before a nice big move up, and then a rejection, maybe a retest of the lower zones before another attempt later on, maybe the beginning of next year. Maybe that's what we could be seeing, but a breakout from here should take you at least to this level. That's where I'd expect to see us go. So I'll leave that squiggle in there for future reference. We can revisit that in a couple of months to see if that's worked. Now we'll just finish on stocks. Stocks weekly, 10 exponential last week, this week, it's all the same. I don't really see too much of a problem with this as of this very moment in time. If it did come down a little further to retest the breakout of the ascending triangle, which is ever so slightly above the 20 and the 21 weekly, around 5,612, probably gets a decent bounce from there and continuation. We've also got retests over the last 4 days on the 50 simple and exponential, which is all part of a golden cross retest of the daily, so the higher end of the golden cross retest with one single drive of hidden bullish divergence on the RSI there. This is the US 500, so it's a futures market, it's a pre-market, it's not the S&P, it's not SPX. I prefer it though. There's obviously a lot going on with this chart that you don't see on others. I would say if you're going to be looking at any of them, this is probably the better one anyway, regardless of not being, SPX. Based on the 4 hourly, we are struggling here. There is a struggle taking place, and you're not going to break bullish really until we get back above 5,750. So you might see a sweep down before you move back up again. It doesn't seem to be affecting Bitcoin's setup though, so that's good. I mean, it is bullish long term anyway. I mean, absolutely mega bullish. Both charts are mega bullish when you look at them on a weekly. So remember that the weekly is your friend. It's try to avoid margin, futures, leverage, and just stick to spot. And you should be okay. We've got another 10 months, I'd say, before any kind of significant peak gets reached. So from a risk to reward basis, generally I would say it's all looking quite rosy. But again, like I said, today, the next 24 hours, probably going to see some volatility, and we'll see what the results are when we wake up tomorrow morning in the UK. And at that point, then we can decide where and why we should allocate in certain areas. Right, that's basically it. Long story short, though, in summary, I think it all looks pretty good. So if you want to join me on the Patreon tonight, we've got a stream. The link's in the description below for that Patreon. And other than that, hope you have a nice day. Take it easy.